The stock market is at all-time highs yet again. There's a brand new Fed chairman of the Federal Reserve. Interest rates are still one of the biggest conversations in finance. The bond market is adjusting. A lot of volatility, pretty normal. And every news outlet wants you to believe this is the moment you should change everything completely in your investments. Should you? Let's talk about it. Kevin Warsh is now the leading Federal Reserve chairman. Whether you agree with his philosophy or not really isn't the point. Markets are always adjusting. They adjust to new leadership. They adjust to inflation data. They adjust to employment numbers, CPI, demand of raw goods, materials. They adjust to political headlines. That's what markets do. The bigger question is, what should you be doing? For most investors, probably a lot less than you think. One thing many people don't understand is how quickly the bond market reacts. The bond market doesn't wait until interest rates actually change. They usually change pretty quickly with data coming from different angles. It moves based on expectations. If investors believe future rates will be lower, long-term bonds often rise. If investors believe rates will stay higher, bond prices can fall. The bond market is commonly trying to price tomorrow, today. And that's why trying to perfectly time bonds is just as difficult as trying to perfectly time stocks. Now let's talk about stocks. Yes, the market is sitting at near all-time highs yet again. Some people look at that and say, it's time to sell, a crash is coming, concern. Other people will say, this market is unstoppable. Here's the truth. Nobody really knows. Not me, not Wall Street, not CNBC, not YouTube. Anyone who tells you they know exactly where the market is going is selling certainty that doesn't exist. The real value isn't predicting markets. The real value is building a financial plan designed to work through different environments of slow growth, rapid growth, expansion, international, developed markets, emerging markets, US, because retirement isn't built on headlines. It's built on preparation. It's built on discipline. It's built on a plan. All of those things come together to create a solid foundation. One thing we do for many of our clients is invest globally. Why? Because America is an incredible economy, but it's not the only one. And it's not the only economy that does very well per year based on the economy and their expansion. Different countries and different markets perform well during different periods. If Europe has a strong decade, great. If parts of Asia outperform, great. If emerging markets lead the way, great. Owning businesses around the world means your future isn't dependent on just one country, one election, or one central bank. Diversification isn't exciting. It doesn't usually make the headlines, but over decades and consistently following through on a retirement plan, it's one of the most powerful risk management tools that investors have. And that's why financial planning matters, is because all of these things come to play as that foundation gets more solidified and as we get to know clients better and through their retirement, as they get to know their budget, expenses, and income, it becomes even stronger and a better foundation. It's also one of the most powerful risk management tools, and that's why we focus on it, as I mentioned. I had a client recently who reminded me exactly why we plan so often. She worked for the same company for 32 years. When she came into my office, or Zoom that is, remote, she was convinced she hadn't saved enough and retirement was years away. She believed retirement was at least 1 year away and unsure of how much to have. So we built a comprehensive financial plan. We looked at Social Security, taxes, healthcare, investment income, retirement spending, everything. And when we finished, she looked at me and said, "That can't be right." So we ran the numbers again. Same answer. We tested another scenario, still worked. So the reality, she actually could have retired maybe 3 or 4 years earlier. Now she's preparing to retire next month, all excited and very much over the moon on this decision. She walked away with great confidence. She walked away with something more valuable than just an investment recommendation. That's why financial planning really matters, and that's why we do it so much and so often. Sometimes people think my job is just picking investments. That's only one small piece. The bigger job is helping people answer questions like, can I retire? Will I run out of money? How much can I spend? How should I claim Social Security? How do I reduce taxes? How do I leave something behind for my family? Those answers don't come from watching financial news and headlines. They come from having a plan. So yes, we have a new Fed chairman. Stocks are near record highs. Interest rates are still changing. Politics will continue creating headlines. But if you've built a strong financial plan, those headlines become less stressful. Because the goal isn't reacting to every piece of news. The goal is building a life where your money serves you, not the other way around. Not where the news controls your emotions and you're all scatterbrain all the time. So if this resonates, book a call, links pinned. God bless you and your family. Thanks for listening.